Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good weekend, all. Ira Epstein of Linn & Associates with your financial market wrap-up for this week of Cinco de Mayo, May 5th, 2017. Now, what we do on the weekend wrap is we don't look at the daily charts. We try to focus on the weekly charts for the bigger picture as to what's going on. One of the things you can see is more gains in all the stock indices. There's a washout taking place in the metal markets, and the open interest, especially in silver, has taken a massive beating if you look at what's going on with the commitment of trader reports. The problem with commitment of trader reports is it's as of Tuesday. Then they compile all the data and we get it. However, what do you know? You know these markets collapsed in gold and silver the remaining 3 days, so that should carry through to even further liquidation, I would think, as we get to the next report next week. When we look at the NASDAQ, take a look. This is the poster child, and that's why I'm focused on it. The market just keeps running to the upside. It's a classic run. It's made a run now in this of, what, 1,800 points in round figures since the election. Massive in size. This is what the chart looks like, and here is Mr. Trump. That's the election, and since then. So he may not pass a lot of things, right? But look at this market underneath him. This is a weekly chart. It's doing pretty well. As you take a look at the swing lines, you have a pattern of higher lows, higher highs. Bullish. The market is over the 18-week moving average of closes. Bullish. Now, another thing I start looking at is, will this number get up to and over the last break low, which right now it's not. That's 53.4750. It has to jump when we get our new print next this Sunday, and we'll see how much it jumps. In previous weeks, give you an idea, 53.21, 52.77, 52.42. I have no reason to think that when we lose one of the 18 weeks back here, that it won't jump enough to be over that number, which means that's a number that the bulls on big breaks might defend to not give up the pattern of higher highs, higher lows. That's the only reason I'm bringing it out. The 100-week average way under the market, so I don't even pay attention there. What I am paying attention, though, is if you take a look at where the market's at on the weekly chart, just over 56.65 is where temporarily, at least, that number is going to probably expand on Sunday night when we get the first print. That is where the resistance point comes in, but this market has hit resistance points over and over. When it finally bends away from them, it just goes sideways and then launches again. I still say what I always say. First challenge after you haven't hit it a while, that's where I think some bulls will take money off the table. When you stop thinking that way, what happens is you hit the number like you did here or here, and you stop playing it. You don't want to do that. That doesn't mean you can't hit it, get a small run, but look at how it pulled back here, even to the 18-day average. So that's my only point. I'm not trying to be a wise guy here. I'm trying to give you ideas as to how they look. In looking at the NASDAQ at this point with the slow stochastics, I don't know why we had that pop up, but we did, still fully locked in upside momentum. We then get to the Dow Jones. Momentum pointing up. I don't use slow stochastics for the overbought, oversold conditions quite the way that I do on the daily charts. I just look at it as to what it's doing. It's pointing up. I do pay attention after they've embedded, because when they lose that, the same theory that the market often makes a run back to the 18-week moving average of closes as it does on the daily charts. But right here, as you get overbought, I don't pay as much attention to overbought and oversold conditions as I do on dailies. Still looking good. Inside week in the Dow. So if the market can clear this 21,010 level, that could give you higher lows and then a higher high, maybe making a run towards the 21,287 zone. In the S&P, your momentum is pointing up. The pattern is one of higher lows, higher highs, 2420, next target if it wants to go to the upper Bollinger Band. Russell 2000, correction mode. It tried, and let me take you back a couple of weeks here. That's all. You've been caught in this pattern. Look at how narrow this is. It's almost like a jug. Do you see that right there? And it's right through here. Try to imagine a jug that's got a cork on it. And you're shaking the bottle up or whatever, and it's going to burst out the cork. The question is which way? The market tried this upside, got up and over the upper Bollinger Band, but last week it could not close above it, and this week it pulls back, not quite hitting the 18-day average, but gathering momentum. Should the market decide to lift out of there, then all of this could become very interesting in that it powers a market to a move. Now, is that move going to be up or down? I can't answer that yet. I can tell you that the market has got everything bullish on the weekly chart, everything. Higher lows, higher highs, momentum is pointing higher on this chart still. It's over the 18-week moving average in the 100. So there is no reason to think anything but bullish on the weekly chart. In the VIX, I do this on the daily basis. It's how our charting service gives it to us. Daily, you're embedded, which is bearish. Now, the market tried to break down again today, went back for the lows of 999, closed higher. It's got a trading pattern of 1124 to 990, sort of caught in there. All the bias is down. Keep your eye on the 18 and 100-day average of closes. If you get a downside crossover, it could be bad. You had a bullish crossover here, and it kicked the market over to the upside. If you get to the down, it could mean that you're going down. And what does that mean? Again, people aren't nervous about the market. Stocks probably get a bounce out of that. When we come to the 10-year note, fascinating in what it's doing. When you look at the weekly chart, it is just so different than the daily chart. In this chart, you have higher lows, higher highs. Bullish. The market's over the 18-week moving average of closes. Bullish. Bearish is momentum. It is clearly pointing to the downside. Momentum often leads price. So I'm not saying the market is broken down. I will say that if it gets a point lower to 124.06, one tick under this low, you've lost the uptrend. All of this action is very important, just the way that it is in the Russell, because, again, you get that sideways action where you build momentum from. Dollar index, lower highs, lower lows, actually closed this week under the lower Bollinger Band. You often get a bounce away from that over the next couple of weeks. Momentum pointing down. Now, if it breaks from here, the next zone is the 100-week moving average, and you can see how it fought battles at that number at 97.58. I have zero reason to think that's not going to be as important there as it was here. I think it's going to be a big-time number, something that we should all be watching. In the euro currency, obviously, the market is built in my opinion, a Macron win. If he doesn't win, you will see this market get killed come Sunday night. I was looking for my word because I'm thinking time zones right here. And it would be Sunday night. I think the market has built that in. It's what it's saying, higher lows, higher highs, knocking on the door of the 100-week moving average of closes. Now, for all of you that are super bulls, where has the market failed? Since 2016. Each time it's come into that zone of the 100-week moving average of closes. So caution, yes. I know what I told my clients to get my advisory services, and I hope they paid attention to what I said. British pound is bullish. Momentum is up. It's pushing out current tense, pushing out and creating a wider band. This is all a base now. So, yes, it can pull back into support zones, but the fact that it's pushed out for now 3 weeks, the weekly chart's upper Bollinger Band, very important to me. It is closing over it, which is also means the market's slightly ahead of itself, and momentum is pointing up on the chart. When you come to the Canadian dollar, this market closed around 73.11.5. I saw quotes as high as the 73.25 area right in a few minutes of trading. You got higher highs, lower lows. Now, what the market had going for it today and what made it rally a bit at the end of the day was in fact, it was most of the day, was the big reversal we saw in crude oil. It had a $3 range from low to highs today, and it came roaring back off those lows. That's a big short covering, and of course the exports out of Canada, very important. Another thing they're doing, just now on Reuters I read that Canada's decided to target Oregon, and they're going to do a retaliatory measure because the Democratic senator from Oregon spearheaded the bill about lumber. They've decided to look at everything they're importing from Oregon, and they're about to put tariffs on it. How's that grab you for a retaliatory measure against a state? In looking at how things are going here, higher highs, lower lows, support in the end, literally right here. I was looking at that trade today because if I were short, that is a number that you got to respect and see, does it have any power to go from there? In the crude, this is what I'm saying. While the market was down $3.11 for the week, today's low was $43.76. So you had a bounce of roughly $2.40 in the market, and that's a heck of a bounce. Where did it come from? Look at the numbers. Where's the 100-week moving average come in the lower Bollinger Band? That's your support zone. So that challenge of it, especially the 100-week, offered some support. However, momentum is still pointing down. There is nothing on the weekly chart that is bullish at this time. I think you've got to be paying attention on natural gas. If the market can clear 334.70, on the weekly chart, you're going to have higher lows and then higher highs. I think it is probably going to target the 350s or wherever that top Bollinger Band is. So I'd be looking at that. What's the pattern right now? You had an outside week up. You have not taken out that week's low for the first week. If you took it out this week, that would be called a bull trap. Not taking it out sets that market as the trading bottom. And be careful if you take out that 335 level. So that's how I'm talking to you about this. And I'm showing you a coffee cup here for a reason. If you haven't tried my weekly research, daily research, you want to do it. Why? I start off the mornings at 8:30 Chicago time recording 40 charts. There's a reason I wait for 8:30 Chicago time. I want to get the meat markets in there, and I want the grains to reopen. And that is the central daylight time that everything happens. Yes, they're electronic, but there's a pause in the trading, and that's how the electronic markets work. And then they reopen at 8:30. I want to catch that and throw you all the information that I'm seeing. I will throw you out ideas for day trades, position trades. If I think there's options something out there, I'm not an options trader by design, but I will tell you what our boys are saying in it. And then I back it up with written updates during the day, special updates. If I say, buy here, sell there, you get those via email. There's a text alert if you're in the U.S. that can come right with it so that you know I'm about to do something. And believe me, when I start putting out activity like I did today, there's a lot of updates, special updates and so on that come into these markets, and that's the key to it. So what do you have to lose? Try it free for 20 days, which is practically a full business month. Think about it. But there's a caveat. If you've tried it before, it's time for you to step to the table and just go to our website and become a subscriber. You can quit whenever you want. All my goal is to throw out an idea you might like, something that might make sense to you, and maybe that's the push some of you need. For the beginning traders, well, you see how a pro comes out with these ideas. Here's what you do. You give us a call. You can go to our website. You'll see a carousel of free offers. Under me, right here on some of the websites, it says, click here for Ira's free offers, or you can click right up here if you're watching me on YouTube. Click that icon. All our free offers are right there. What do you got? Take advantage of it. You got nothing to lose. I'm Ira Epstein. You have yourself a good day. But when I say nothing to lose by trying the update. I want to be certain the government understands that. I am not promising winners or losers. You have nothing to lose when you're paying nothing for the research. You have yourself a good day. I'm Ira Epstein.